not only is the U.S. government not going to ban Bitcoin, the U.S. government's going to need Bitcoin. And so now what you have is you have both political parties saying, hey, Bitcoin is in the clear. Let's go. But also remember that, if you had to pick one group of people who have an inordinate amount of influence in this country, it is people in the kind of Wall Street traditional banking kind of apparatus. And now what you have is a tool for them to drive a lot of revenue. And so you have BlackRock and Fidelity and Franklin Templeton and a number of these organizations that are all saying to themselves, wait a second, we like this stuff, right? There's an opportunity for us to make money here. We believe in the technology. We are going to go and support it.
During a recent discussion with Kitco's Michelle McCory, Pomp is looking forward to 3 triggers, which he says will begin later this year and have an instantaneous effect on Bitcoin and crypto asset prices. The first is increased institutional interest in the spot Bitcoin ETFs, especially when major national wirehouses finally approve BlackRock's IBIT and other US spot Bitcoin ETFs to be listed on their platforms. When this happens, Pomp predicts that even sovereign wealth funds and nation-states will begin to invest in the spot Bitcoin ETFs and even directly into the underlying crypto asset. Another trigger Pomp mentions is the US election, particularly if a pro-crypto president like Trump is elected. The final trigger Pomp mentions is an inevitable rate cut announcement from the Fed and other major central banks worldwide.
I think there's a couple of different things. First, seeing a couple of large organizations go ahead and allocate to the Bitcoin ETF. Estimates right now are about 80% of those ETF inflows come from retail. And so we still have yet to see very large organizations, very large RIAs. There's still many trading platforms where the Bitcoin ETF is not even turned on yet for kind of private wealth clients. And so seeing some of that happen, I think, can be a potential catalyst. I also think seeing a sovereign wealth fund come out and say that they've started to buy Bitcoin, whether it's via the ETFs or spot, would be quite impactful. I think that seeing President Trump get elected, as it stands right now, he seems to be the more pro kind of Bitcoin, pro crypto candidate versus the current Biden administration. Maybe that changes, but given what we know now, Trump being elected, I think would be tailwind. And then lastly, frankly, I think there's this element of as we head in towards the end of the year here, the Federal Reserve is going to have to start making some decisions. And, recently it came out, David Rubenstein, the co-founder of Carlyle, said that he doesn't believe the Fed is going to make any interest rate cuts before the election. They don't want to kind of meddle in politics. There's many other people who believe, no, that's exactly why they're going to cut rates, kind of going into the election. Regardless of what they do, it'll have an impact. And so if they cut beforehand, that's likely to be positive for Bitcoin. If they wait till after the election and then cut, that'll be positive at that point. But regardless of whether it happens in August and September or it happens in November and December, it is very unlikely, in my opinion, that we have seen the top of this Bitcoin bull market. And it's much likely that we will go higher at some point over the next 18 months. I have met with a lot of different organizations over the years. I've met with central banks. I've met with sovereign wealth funds. Many of my friends have done the same thing. It has been very clear for years now, going on 6-7 years, that these organizations are looking at Bitcoin and the broader market. They're trying to figure out what should they be doing, if anything. What we know from a kind of public stance perspective, there are now multiple nation states that have had, dipping their toes in to the market. They're buying Bitcoin, down in El Salvador. There's a lot of countries that are now starting to do these joint ventures where they're actually doing mining. So you see in the UAE, you see this in various African countries. You even see it in the United States to a degree where people are using certain power sources to go ahead and mine. And then I think you're also starting to see in countries that maybe people wouldn't think about, you're seeing politicians come out and say that they own these assets. And so whether it is the actual government themselves or it is the individuals who govern holding the asset, I think that really has an impact on kind of the population and what they're going to do with their financial assets. And so having a sovereign wealth fund come out and say that they've bought Bitcoin, I don't think is something that's going to be shocking in the sense that, like, of course it's going to happen. But when it happens and which sovereign wealth funds are the first ones, I think will have an impact and be a catalyst. I also think that there's a very interesting conversation around the fact that central banks around the world have watched what the United States has done from a financial sanction standpoint in the Russia-Ukraine conflict, and the stance that the United States took towards Russia and some of their assets, I think has caused a lot of central banks around the world to say, well, maybe we should diversify some. Maybe we shouldn't sit in US dollars or, completely in treasuries. Should we be buying gold? Should we be buying Bitcoin? I do think that kind of sanctions hedge risk is something that people, are kind of discounting, but will definitely play into this calculation for many of these governments in the coming months and years. China selling that US debt, who are they selling it to, right? If you think of central banks, they are very rate insensitive, right? They don't care if interest rates are at 2% or 5%. They're buying it because it's a reserve asset for them. But now they are selling this to pension funds and institutions and various investors who are sensitive to rates. And so when rates are, 5.5%, that's great. They're getting tons of yield. But when rates start to come down, many of those investors are actually going to offload that debt because now that rate is not going to be attractive to them. I think that the institutions will sell, right? They're obviously holding debt today because it's paying over 5%, and that's a very attractive rate. But as that rate goes down, they are going to look to move somewhere else. And as markets work, rates come down and risk assets will take off.
During his discussion with Macquarie, Pomp also talks about the regulatory environment and the grudging acceptance of the crypto space, not just by politicians on both sides of the aisle, but also by some of the most powerful and influential names on Wall Street. Let's get back to the interview.
You can only look at the data that we have so far. And so far, every single data point is backed up the thing that I've been saying for years now, which is not only is the U.S. government not going to ban Bitcoin, the U.S. government's going to need Bitcoin. And so if you go and you take a look at a lot of the data points, right, we have now two separate presidential administrations who are saying we are going to be sympathetic to these assets. We have the explicit endorsement by President Trump, who says, if you hold Bitcoin, vote for me. I am the pro-crypto candidate. I'm going to protect this. I'm going to protect mining. And mining can solve a lot of the energy problems, etc. But we also have the implicit kind of endorsement by the Biden administration, where their regulators have gone ahead and approved a Bitcoin ETF. And so now what you have is you have both political parties saying, hey, Bitcoin is in the clear. Let's go. But also remember that, if you had to pick one group of people who have an inordinate amount of influence in this country, it is people in the kind of Wall Street traditional banking kind of apparatus. And now what you have is a tool for them to drive a lot of revenue. And so you have BlackRock and Fidelity and Franklin Templeton and a number of these organizations that are all saying to themselves, wait a second, we like this stuff, right? There's an opportunity for us to make money here. We believe in the technology. We are going to go and support it. And so whenever you get an asset that is entrenched in both political parties and also in some of the kind of most influential circles in terms of political donors and also people who run the financial system, it is very, very hard to see how you will get away from that and you'll turn the regulation against it. Because what's more likely is if you get a regulator, if you get some sort of politician who is abrasive to these assets, they either won't get into office, they won't be appointed, or they will quickly be asked to step down, because you have too many people too invested in this asset at this point to kind of go the opposite direction. And if the United States is good at one thing, it is good at setting a path and sticking to it. Very, very rarely will you ever see us set a kind of either explicit or implicit set of rules in place and then kind of reverse it, because the United States rule of law is so important and people depend on it in order to plan their business or their financial life around those rules. I really don't see it turning around at this point. When MicroStrategy came around, he said, I am not in that business, but I'm going to hold this asset on the balance sheet. And obviously people saw what he was able to do in terms of expand his balance sheet, use the debt markets, issue equity, really drive quite an attractive financial return for his shareholders. And so then you quickly got Elon Musk and Jack Dorsey with both of their respective companies to do something similar. But it kind of went quiet after that. We didn't really see that many other companies doing it. We went into a bear market and everyone said, hey, well, maybe it's just kind of, 1 to 3 companies and that's going to really be it. Now what we've seen, though, is a spattering of these businesses, and they're not just even in the United States. You have DeFi Technologies out in Canada, which we've been pretty heavily involved in. You've got MetaPlanet out in Japan, who's putting Bitcoin on their balance sheet. You have a biotech company called Semler Scientific that's doing it, I think, out in California. And so, 1 is a data point, 2 is a line, 3 is a trend. Well, I know just there of at least 5 or 6 companies that are not in necessarily the business of Bitcoin and crypto, but they are saying to themselves, we are going to put these assets on our balance sheet. We're going to take cash and convert it to Bitcoin. And so those are not 5 big companies, right? It's not like it's Facebook and Amazon and Google or Dell. And so all you need is a little bit of momentum. And I don't think that you're going to see the MicroStrategy playbook played out where it's 100% of a balance sheet. I think it's more likely you're going to see, 1 to 5%. And they're going to say, well, we're just doing it as a diversification. no different than we would just buy treasuries, buy gold, buy something else. And so if you get, let's say, 1% of 10% of corporate balance sheets in America to go and buy Bitcoin, that's a lot of buying power. And so for an asset that is, 1.2, $1.3 trillion in market cap, you don't need that much buying power to continue to move this thing upwards. And so I just think that is, kind of this, I think of it as it's infiltrating the public markets, right? It's one company at a time in a very decentralized way. It starts with the small companies, similar of a bottoms up approach. But if you said to me, do I think one of the Mag 7 stocks have Bitcoin on their balance sheet 20 years from now? The odds tell us probably, which would be a pretty incredible move, in 35 years to go from invention to having infiltrated some of the largest company balance sheets in the world.